All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the last Monday of August. That's the 28th. I am putting a little something in here for you guys. This is something that may or may not have been brought to me by a client named Bill, but have a laugh at it. Biden economics made me stronger. I can now carry $70 in groceries with just my pinky. If you are business orientated or less taxes, you obviously like the previous administration. If you're more conservative in regards to, how would I say it? If you have more belief in saving the world, maybe you might like this this administration better. Bill, thank you. I enjoyed it, and I can just imagine Mary and Maud. I'm sure you guys are probably going to give me a little something. I'll keep those comments to myself. All right, here we go. Let's talk about Ford, and I'm also want to talk about Under Armour. We got people out at Ford at $15 with a long put. And just so you know, long put, I believe, cost, and I don't quote me on this, but 43 cents, sold off at 15. So if you take out the 15, your break-even point should be $14.57. If I get you back into Ford anytime before it's back up at $14.57, you have saved some money. So just some thoughts for some of you. Why are we out of Ford? Bill Brander, I may or may not have some of your comments in here. Why are we out of Ford? Just a hint. Millie threw in the third world I live in. They're outstanding in logistics. Not even Amazon compete with them here. I use them always impressed. Only Ford is F. Ford does the cars, Abraham. Bill says because he loves Ford. I may own 4 Fords myself. F-250, F-150, Econoline van, a Ford Expedition. Love them. They're heading down and now sideways. So Lee's taking the technical. Lee's going, Kevin, technically, they're heading down sideways. So they actually are on a trend line right now. They are definitely headed down. Good thing we got them up here at the 15. We didn't get them at the 1550, but we were close. If I went to Ford on our chart that we use here for stock charts, they do look like they're building a base. But a couple things to point out. Let me get that out of your way. They've been oversold for a while. Big drop down. News of how poorly their electronic trucks are, as well as the fact that they basically came out with some poor news on, I won't call it a revision, some recalls on some things. Yes, they have stayed oversold for a while. Let's face it, big money's not interested in being in. In fact, I wonder, I'm just looking for their 10-day, actually, I guess I could have got it here. Volume is still 29 million, down from the 38, but yeah, it's not. I get what you're saying now, Abraham. Sorry about that. I don't have a lot of faith in him, but the big catch was the CEO, the Ford CEO came out and said, "Hey, we're going to keep throwing money into electronic vehicles. Even though the loss was supposed to only be 3 billion, Joe said, keep running the EVs, even though the loss was 4.5 billion instead of 3 billion like expected." So if you ask me, they're throwing good money at bad. Once again, they have the truck, but they're trying to create an electric vehicle around their truck instead of creating an electric vehicle around electric vehicles. As we discussed last week, electronic vehicles are typically not your safest. So it's something that you need to be paying attention to. I'm going to say it, and Bill, you are kind of right. Ford is more interested in playing politics than making money right now. They're also trying to, I don't know how you'd say it, they're trying to appear for all genders and all types of people when their bread and butter is just a work truck. Their bread and butter is just a work pickup truck. And they don't make good cars outside of that realm. My wife really does like her Expedition. It's not one of the better engines. In fact, it's a good thing I've got the warranty that I do, because it's a $100,000 engine and it's had problems. $100,000 engine and it's had problems. So yes, we're going to be out of Ford for a while, maybe for the next year. Yes, they do have a 5% dividend yield. We understand that. And we may jump back in. If we can't find something better, we might jump back in. But right now, the short answer is we took a lot of profit off of getting out of Ford up at 15, and we're going to watch it closely and maybe get back in, but exit half or more back at the $15 level. Under Armour took puts off at, I guess it was last week. Come on, T. And booked a profit. We did good on Under Armour from 13 down to 9 to 750. With that said, we exited puts at $7.44, which means we are losing from that price point down. We didn't call it right. Our expectation is we'd have a hold at 750, and we were wrong. The short answer is we did not get it correctly. Now, we like the chart. We like the chart because when we exited on that down day, the big down day, boy, we probably exited a week and a half ago. We actually thought the 200 was holding. We exited it and didn't work the way we wanted to. But I still remember at 744, we felt we were at the bottom of the range, holding the 200 day. Nope, we did it on the big down day. We thought it would hold the trend line on the big down day, and we're like, you know what? Fallen far enough, not worth it. We expect a big bounce back higher. And we took off put protection. With that said, thank goodness it's now trading back up at, where is it trading at? Trading back up, it closed at 753. So we've run it all the way down to $7, a little under $7, all the way back up. No puts have been on it. We're riding the bounce back up. Yes, we are paying attention to the 50-day, $7.65. We would expect it to get up because of how much it's been sold off. But at $8 or around $8, we will most likely add puts back on for protection because it probably won't get above that. With that said, we love that it's breaking above the trend line. And we might have an early breakout for Christmas. So for Under Armour, we're looking at it a little bit differently, or a lot differently than Ford, to be honest with you. So that's what we're doing on those two stocks. All right, what do I have next? This has been an interesting year. This year has probably been one of the years that I've had more emails and questions about what's going on. So yes, again, it's another unusual year. But if we were to talk about last year, right? What made last year go up? What's pushed last year? What would you guys tell me? What would you tell me if we were talking about last year? Why last year was moving? What would you guys tell me in regards to last year? Like, Kevin, I don't remember what I ate for breakfast, let alone last year. Really, last year was a bit of a strange year. We expected to go up, it went down. What would you tell me about last year? Okay, Russ, that's a good one. So rebounding from pandemic. And I'm also going to put in there that I'm going to kind of link it to it. Actually, Jim just got it. I'm going to say that the money put into the system was still working its way on through. Definitely. Lots of protection paid off last year. We had huge amounts of protection. What else though last year? I think there's one more thing that we could put in here that helped last year go up. You could even say two things, and they're somewhat political. But if you were to look at last year, what would you say? Thinking politics. There we go. Fed actions started in December, basically, right? And the administration was pretty tame in new regulations. Which gave us, in all intents and purposes, it gave us a 19.86% return with, no, was that last year? A loss, right? Excuse me. With uncertainty, right? Was that fair? What's happened this year? What's happened this year to give us, what, a 14% up here? Love it, right? Oversold last year. Right? I agree. What else happened this year? Huge Fed rate hikes. I don't remember 4 75-pointers either. So, yep. We'll call it that. Anything else? Inflation is still a problem. Okay. Now, I'm going to go ahead and I need to change something here. We said the Fed or the FERD action started in December. They actually thought they were going to end in December. And huge rate hikes were last year. You have your years wrong. Fed rate hikes this year are 4 that were only a 0.25%. No one caught that. Nobody caught that. Yet that's something that you need to be putting into an understanding. Our rate hikes this year, February 1st, 25 basis points, March 22nd, 25 basis points, May 3rd, 25 basis points, July 26th, 25 basis points. And we can tell you sounds like 2 more at 25 basis points for Powell to raise rates. If you're to ask me on when those might happen, we have a September, October, and December. I would probably expect a September hike. And we call it an October. I'm just going to put it in here as October/November because it's the 31st through the 1st. Another rate hike. And the market shrugged it off last Friday. The market shrugged it off last Friday, and it's almost like the market is prepared for it. We're prepared for 2 more rate hikes, and our market has gone up. That's not what he said. He said he's prepared for more rate hikes. He didn't say 2. Bullard came out, and I can't remember the lady, but the lady also said, hey, we're really not expecting any cuts next year. Yet right now, the housing market has 2 cuts priced into rates for next year. Again, sounds like a recipe for disaster. We shouldn't be surprised by movements. I will tell you, it's hard to outguess the market, so we protect. That also means we don't time the market, and sometimes are at the market's mercy to allow some stocks to come back. Now, I forgot who said it in there. I think it was you, Mary. This year, we should also put in here 80% or so of the growth is basically only 7 stocks. And that is correct. That is, you are correct there, Mary. So we haven't seen the bulk of the market come back. With that said, if I can get a little religious on you, in church, we just finished up Romans. And something we learned in Sunday school was some of the mysterious ways that the Lord works, right? And if you go to Romans chapter 9, verse 32 through 33, it talks about stumbling stones and where men use their own ways, not working on faith, but use their own ways to figure things out. And as we were discussing this in Sunday school, our comment was, how do we as individuals remove stumbling blocks for others? which for us equals service, right? How can we do service to help others? When my son smashed his head last year, boy, we had people bringing my kids food. 5 of my kids thought my son's traumatic brain injury was the best thing in the world because they played video games, didn't have mom and dad harping on them for work, for chores. People in neighborhoods were dropping off meals. They're like, hey, what do we get for lunch? What do we get for dinner? Look at this nice food. People were amazing. They took away from us the worry of taking care of our other 5 kids as we took care of the one that was injured, the one that was hurt. It was pretty interesting because a lot of people said they would just drop some food off. It obviously helped out my family. That act of service was a huge joy and a relief from mom and dad. And for them, they would giggle and laugh at the way the kids would just be so excited about what someone else was bringing them for a dinner. There were 2 joys in a single act of service. The people would leave just giggling and laughing that my kids' eyes would get so wide, would thank them for the food, would tell them days later how good it was, how it was better than mom and dad's. My kids were being fed. Again, you could call it 3 joys because it took a weight off of my shoulders as a parent just to make sure my kids were fed. And it was really, we went through 78 days or so that my wife and I were just non-existent. So for that, in this case, there were 2 or 3 joys in that single act of service of bringing over food for my kids. As Keeve and I were talking about a couple things, because obviously we're kind of studying the same thing, right? We're both the same religion. What were the joys of last year and the way we manage money in today's stock market? And we wanted to list them out. We wanted to list out and find those joys. And we thought it was somewhat interesting because we kind of went to some of you guys. But one of the joys is we take out market risk by trading individual stocks, which also, I could say it's Buffett way, but also gives us a greater opportunity to beat the market handedly over a longer period of time. You're not seeing mutual funds handily beat the market. You're seeing individual stocks that have these 100% returns. That's one of the joys that our trading does. I love the idea, protect and make money on the way down. We came up with add cash to portfolios without asking for more money, which is something we're doing right now. We're adding cash through this time period. Add shares to portfolios without asking for more money. Love this one. Exponential growth as shares come back because we now have 20, 30, 50, 80% more shares of stock. And actually, the way that this one was mentioned, which I should probably say it that way. Come back to their purchase price. And then the last one is longer term exponential returns in general. So it was interesting because as we asked a couple questions, we found 5 or 6 joys that come versus just sitting and holding. Pretty interesting, as the majority of these came from, well, all these came from clients. So little, I mean, it's just different. That's just the way it is. I think it's fun. I think it's interesting. And it was just something that for Keeve and I kind of went along with our Sunday school lesson for the last little while. Briefing picture, where our markets go, we're going to say higher, but notice the Dow Jones Industrial Average could not get above the 50-day simple moving average. It's something we're looking at. This is the reason why we haven't ripped protection all the way off on our positions. So yes, this is one of the reasons why we're holding those puts close to our vest, especially with some of the positions that we have on. S&P looks really similar. Not only could the S&P not get up and break its 50-day, but it had a pivot point, the S1 support level pivot point, that it also could not get above today. We're in wait and hold, or we're in trying to outguess the market. The NASDAQ has a pivot point, which really isn't support or resistance. It's just 30-day herd mentality. And it also could not get above the 50-day. So yes, we have some how would I say it? We have some puts that have some profits in it that we're not ready to take off. Some expire September 1st, which is this Friday. Big money will be out of the market as next Monday is Labor Day. So we will have a day off, which also means we would not expect big money to be in the market. We would not expect big money to be in the market after this Wednesday, even though we have end of the month average work week numbers coming up. Volumes will start to be lighter. And you can also see, just if you look at the NASDAQ, you can also start to see here the trending down in volume, and it should keep going that way through till next Tuesday. So we will not do Monday night's webinar on Monday. Next Monday, we'll end up doing it on Tuesday. You'll see that shift to Tuesday since it's a holiday. A lot of economic news on very little earnings. Actually, where will S&P in September? We're thinking down 1.5% just because that's a historical norm. Earnings, Big Lots, Best Buy, Hewlett Packard, Chewy, and Salesforce on Wednesday. That's an interesting one. Thursday, Dell, Lululemon, VMware, Dollar General. Dollar Tree was pretty pathetic. Dollar General will probably not be the same. And Broadcom. Economic reports, consumer confidence and JOLTS will be important tomorrow. GDP on Thursday. Personal income, personal spending on Thursday, and the average work week numbers come out on Friday. I found a kind of an interesting article. Everything about what Fed Powell says, inflation too high, prepared to raise rates further. Just an interesting article to give you a general overview of what he was saying last Friday. Please read through this. Very well written. Something else that came out today, China's rare earth dominance makes U.S. supply chains vulnerable, trade representative says. We heard a lot about how they own the market on the 15 rare earth metals, primarily the ones that are used for computers. Technology, I guess would be a better way to say it. And so just an interesting article on why China still is important to us. I just put this in here because I laughed. Mark Zuckerberg's new return to office mandates, clear problem. It caused a huge amount of distrust. Yes, if you can do all these things virtually, and he's working on all this virtual work, dang it, why the heck can't you work virtually? Oh yeah, because human nature is people are lazy, and if they don't have to go into a work or a job, they don't do as much work at home. I've seen it with individuals in the past. They get stuck on some honeydews. They don't put in their 8 hours of work. It's really funny how there are those that can work from home and there are those that cannot. And last but not least, a psychology expert's 5 toxic phrases, highly selfish and entitled people always use, and how to deal with them. This feedback is insulting. My ideals are valuable and always merit serious consideration. Their success comes at my own expense. Why are you trying to control me? You're being disrespectful by not agreeing with me. Really interesting article I just wanted to throw in there. Hopefully you guys haven't heard a lot of those from me. Any questions you guys have that I can answer for you? Any questions that you guys have that I can answer for you? And let me go back, Abraham. Abraham made a comment about check Millie. And you've mentioned it before. Abraham, for those of you that don't know, is down in Brazil. Macabro Libre. Macabro. Wow, it's so big today. It's expensive. $1,200, Mercado Libre Inc. So is this Amazon's competition down in Brazil? 10% off the 52-week average. Insider owned is nice. Short interest is, well, it's above 2%, so it has a pretty big short float that could cause a run on it pretty nicely. Income, it's profitable. Cash per share is nice. Long-term debt to equity. So something that stands out that would be a major concern to me, debt to equity is 2.12. Long-term debt's 1 to 1.0. So short answer is right now, every dollar they earn, they're paying out $2 in debt. Not a big idea, not a big problem. Let's face it. Boy, it was 20 years apparently that Amazon ran in debt. But I never got on board with Amazon. They just weren't making money. I'm checking Amazon's debt really quickly. Amazon's debt, yeah. So here's the short answer. I think people are shorting it. It has a huge fall down because its debt is ridiculous. Its debt's to the point of Amazon, even with its growth this year, its debt's to the point where it's more likely to go out of business than to stay in business. They might have strong financial legs. That might affect those parameters. Maybe, but that's my glaring red flag. The second red flag is there's no way a PE ratio at 83 is justified with a forward PE ratio of 43. So price should be cut in half because of that as well. This one would be a hard one for me to invest in. And it all comes down to here. Have I missed Amazon's run up? You better believe it. I couldn't get on board with Amazon, and neither could Keeve. If it's not financially sound, there's too much risk for what I do for individuals. So for that reason, I would not be in this stock, even though it obviously is headed up nicely. It just fundamentally does not make sense. So Abraham, that's why I'm not in Melly. Especially because I hate Amazon too. Debt ratio too high, and PE, I was going to say out of bounds, unrealistic. Any other questions you guys have? Going once, going twice. All right, and yes, Abraham, I will check them out further. Again, those are two big red flags, though, and that's probably the same thing that kept me out of Amazon. Again, made millions off of Apple, made millions off of Baidu, and yes, they were high, but they were never that high in regards to trading. Okay, I don't see other questions come in. You guys have a wonderful evening. Appreciate you being here. I should have this uploaded tonight. Again, I apologize for last Friday, and or last Thursday. That was on me. That did not go through the way it was supposed to. We will have next week's on Monday. Will be pushed to Tuesday. So everyone, enjoy your Labor Day vacation. Look forward to seeing you next Tuesday evening, a week from tomorrow, and I'll talk with you then. Bye-bye, everyone.